Hi everyone. Today is Friday, March the 28th. It is not the last trading day of the month. That will be Monday. So Monday ought to give us a fair bit of fireworks. But it is a Friday, and we are looking at charts that are really trying to get a bid off the bottom, but having a really tough time. So if we take a look at the daily, we can see that we had a pretty good run up into the 200, stayed over it for a day, collapsed below it. Now, some folks like to say, hey, I like 3 days above the 200. For me, I don't normally look at that. What I will look at is if I pull back, do I hold prior higher support? And so if we were to draw a trend line here, which, I don't draw trend lines very much, but if we were to draw one, we can see how important it is for us not to break this line today. If it does, we have ourselves some kind of ugly flag pattern, right? And a bearish flag is very likely going to follow in the direction of trend and move into lower supports, and those lower supports become 56, 70, and then some. Right? We have some news coming out this morning. What is that? News today. Personal income and outlays, and then consumer sentiment, which is such a ridiculous indicator. Hey, how do you feel? I don't know. It depends. Am I driving a Bentley or, a Dodge Dart from the 70s? I don't know. Right? That's really. Anyway, sorry. I digress. Let's take a look at the hourly charts. Yes, I know, a lot of lines. Let's clean them up a little bit. Let's take a look at where we are relative to yesterday. This is yesterday's opening range. In the E-mini S&P 500, it's 5730 to 5750, right? Above it, it was long into resistance. Below it, it was short into support for about a few seconds, and then it moved right up on a reflexive bounce. This tends to happen in two places. One, where we're near weekly support levels, and two, we have thin volume. And when we have thin volume, you're going to see markets build out pretty solid looking wicks. And that is what is happening. We've got very wicky days because thin volume allows prices to get pushed around. Right? It's like the sponge thing that I spoke about yesterday. All right, so today we are sitting, the opening range gave us 57.38, 57.44. Breakdown gave us a short into prior support, and that was the low of the prior Globex open. Long gave us a little bit of nothing. And so literally, if we went long, which I prefer to take longs on the pullback. Does it look above, fail, and then hold a higher low? I'm much more inclined to buy the dip than buy the breakout formation. Now, if you did buy the breakout formation here, your stop would have been the bottom of the opening range, and your target, really, first target would be heavy congestion at 57.46 and then 57.50. I don't think it got either of those. No, it did get the 46 here on a wick and then fell right off the cliff. Okay, so what are we staring down here now? We are inside of the Globex open of yesterday. Markets feel a little bit heavy to me, so I would not throw out of the woods a fade that took us right back down into prior days Globex lows or highs, right? And that's what the lines tell us. If we rally, 57.50, of course, key area for us to get over, and then 57.69, the 50 simple moving average is still well above us. Market feels very heavy to me this morning. All right, let's take a look at the daily on the NQ. Staring the NQ down, what's happened? We've got certainly, let's draw that, our trend line. Certainly we have higher lows, but again, we've got this pesky break right here at 19,900. We need to keep that, right? That's super important that we keep that formation. Else, we again have a broken flag pattern, and that gives us momentum, more momentum to the downside. Next ledge in the liquidity line is 18,700, right? So, do or die for the buyers. Let's frame it out in something nice and clean. Where are we relative to yesterday's opening range in the NQ? Well, we tested it and absolutely collapsed. Another lower low in the pre-market. What are we trying to do now? Retest the low of the Globex Open today. Now, the high of this morning's Globex Open, almost identical to the low of the prior Globex Open. And so, could you have taken a breakout there just at the test of it? Yes, but pretty far from the moving average. A clean breakdown here gave us the short first. We take it at the low of that edge. And then that gives us the target into yesterday's low. And that's what it gave us. Time to get out of the trade. This is not an environment that looks like a buy and hold to me. It does look like an environment of trading from support to resistance and then resistance to support. Okay? Within the range of trend. So, could we be holding the higher lows of the day? Yes. This 19,900 area, super important. We'll see if it bounces off that 19,920 zone and then puts us up into 19,980. Let's go to the YM daily chart. Very sideways. Testing a flat 5 up over the 200. Boy, it's so interesting, the narrative, right? All the narratives about things, and the Dow is it's in a recovery zone. It's above the 200 and heading towards the 50. Is it in a precarious space? Absolutely. Absolutely it is. The move up, low volume. So pullbacks, probably buy zones. I'd like to see buy zones in the future. Let's go to the hourly chart. Big messy patch. Let's take a look at what's most relevant. I am going to remove that one because this is yesterday's opening range candlestick and today's opening range candlestick inside of yesterday's region. So when we open up inside of the prior day's region, we're likely to have a slosh bucket, which we did. Downward goes into yesterday's low. If you took the short, that's the target. Breakout. It should have been up here. That breakout failed. You might think to yourself, wait a second, what's the bigger trend? It's down, so my breakouts are probably going to fail, right? We've seen that happen time after time after time. So what did we do last night? We made a lower low. If we make a lower low, we're still in downward trend. And so the bounce up into the Globex low gives us a short. Where's the first target? Prior regions. What is that? The first one is yesterday's low, which is 42,543, right? The one after that is 42,500, but I believe that value area low at 42,490 is more important. If we lose this congestion zone, then we have no chance of having this reversal formation hold up at all, right? It still looks like it's going to head lower. Yeah, markets definitely look heavy. Cross current, for sure. We could be building something fantastic. I don't know. All right, Bitcoin, what's happening? We're under the 50. Bounces or sell zones. Series of lower highs. We could put a trend line here, right? right? Still selling, still lower lows, except for this bounce off of the 200. Well, no, it's still a lower low, but it begins to recapture. And now we've got this trend line in play. Does it hold? Potentially, right? This range right here is the one we're staring down. Can we get above 85 and retest 95? And so literally we've been caught in an $8,000 range for a couple of weeks. So let's take a look at what's going on from this perspective. We've got big breakdown, right? That was this morning. Opening range formation, 87,690 to 88,5. Here's the break. Where's the target? Prior zones. So the first one is here. This is heavy congestion though. So it gives you a quick snap trade into the lows and then a bounce and another failure opens up the next short. Where's it going to? Congestion, yes, and then it's going to stair step through the prior formations. I don't like this. I'm going to, this is the one I'm going to clone so we can see its origin, right? So we've moved through literally 2 days of ranges. We're now in this box. The high low of this area, low is 85,000. Let me do this again, remove. Let's clone this. Right, we've got 85,040. It bounced off of it. And so what are they trying to do? Get back above 85,800. That's what this trading cycle looks like. But wow, look at this range. Right? Big range and then a gap underneath with the area down near 83,970 as potentially important to watch. This looks like a bounce zone to me, right? So what do I want to see it do? I want to see it pull back, hold a higher high, and then breach resistance at 85,600, and that will take us to the north. If we lose 85, chances are we head to 83. I think we go right back up into this range. Today is going to be very interesting, folks. Oil, right? What do we have going on in oil? Well, we got a few macro things going on, right? And so spend is going to get pretty expensive for refiners and producers. And so, right, they're talking about the flanges costing 30% more and blah, 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 blah with the tariffs. And so we just have to see what happens here, but it continues to put pressure on oil. Next stop, right? Pullbacks have been buy zones. Pullbacks into 69 look great. Now we're into 70. Now 71 is next. See the range? We've got pricing action all the way to 72 in my mind, right? And then potentially 73, and there's the 200 look. 250 train wreck, right? But we've got some forces that are pressing this with a little bit of bullish energy. So let's go down to the 1 hour and we can see the breakout action. It's leaving its regions. This is yesterday's opening range, breaking above it, right? Yesterday's opening range, breaking above it. So now we have to pull back, hold the high, and then move to the north. Notice the 1 hour formation here, how incredibly noisy. The bounce out takes us into prior resistance, value area high. Bounce down takes us into prior support. When I see the first candlestick start moving like that, and it's got wicks above and wicks below, I will trade the range, but I will use the higher ranges and trade into the bottom of the box, or the lower range and trade into the bottom of the box and then the top. Okay, so we can see oil breaking right now. I really think that this has got some legs. I really do, right? So where are we staring down? We see these stair steps, 24, 47, 83, 71, and so on and so forth. If it can come down into 69, 64, ideal buy zone. If not, trouble. Now, here's the thing. See this inventory? When it gets to 70.40, you got to take some profit because it could easily come back down to 69.40, right? Very messy candlestick formations. Take part of your profit as it gets to the top of the range and then reload as long as you're above the 50 and you've got an upward sloping 5 and upward sloping momentum. You're going to be in great shape. Let's take a look at gold. It's in a contract roll, right? Big selling event right off a brand new high. That's pretty interesting. Opening range all the way down here at 3,096, right, to 3,100. Does it come back there? Potentially. On my hourly chart, I see the fade into the volume point of control and the VWAP, right? Also, because there's been so much trading there this morning in this pocket, all the value is sitting right there in the space. So I suspect buyers tried to buy 3105. I wouldn't. I would potentially try to buy 3096. We can see the gap roll really making a difference here. I got to change the color of this so that we know it's not an opening range formation, but they are going to try and buy it here because most of the volume is sitting here, right? Look for a topping formation potentially to give this chart legs in a downside event and fill the gap into 3,084. So, all right, let's get to SPY. Good grief, I'm taking forever. Let's take a look at the daily. All right, rejecting the 200, up, closing right on it, 2 days above it, collapse. What are they trying to do? Still hold higher support. They're still buying the dips, folks, right? You just can't sell the low. And you can't buy the highs. You're going to get shredded. It's about trading the relative range because the candlesticks are retracing themselves with a fair bit of regularity, right? Are we looking at a flag pattern? Yep. Right? Just like all the others. So let's go to the hourly. Messy. Yes, very messy. 4-hour formation. We're above it. Pulled back into the top of it, and now we're trying to hold the bounce. Now, everything's going to stall because we've got these numbers coming in just a few moments. You're going to see giant wicks. They're going to be sell zones. You're going to see giant dips. They're going to be buy zones. And if it's just a wiggle space, just wait for the retest of that opening range and get yourself a trade that you might like, right? That's really it, folks. Let the chart come to you. And for me, that means a pullback into prior support. That's the opening range low. And then getting above 565. It was not a good thing that we closed right at the lows of the prior day after breaking down on the 200. So sellers are going to really try and do something. If they can't do it, they're going to turn coat and become buyers in the range and push us back up to 570. Qs. Daily. Never broke above the 200. Rejection area. Here's point of control. Way down here at 474. Price action saying, you got to be careful. You got to be careful in this area. Yes, it's making higher lows, but wait for the reflexive bounce where you have seen all the buyers show up. That's 473. Let it break and then recover. The size of the break will give you your risk, and then you're off to the races. Let's take a peek at the morning formations. Here is, I'm going to remove this one. It's right in the middle of the noise. I'm going to remove this one. Okay, so yesterday's opening range formation, we are well underneath it, right? That's a breakdown. This morning, right? So we have time frame down, but this morning the low is 478. Can we hold 478? If the answer is yes, buying pressure. Momentum is almost in the middle of everything, so you're going to have candlesticks that retrace each other just like this. That's what it is, right? If you got upside momentum and downside trend, you're going to have candlesticks retracing each other. This is a range day. Deep dips that start to show promise, going to be buy zones. Huge spikes, going to be sell zones. I think we are still in resolution. Good luck trading today, folks. It's going to be sticky. You want to be light and tight. Take care. Let the trade come to you. That's the most important thing. Let the trade come to you.